Standard Chartered Bank, a financial powerhouse, just dropped a wild Ethereum prediction. $7,500 by the end of 2025. They're calling the price right now a great entry point for investors and traders. But here's the thing. The real story isn't the number, it's why they're saying it. Behind the scenes, institutions and corporations are quietly gobbling up ETH at a pace that's looking insanely bullish. This isn't just hype anymore. It's actual accumulation. Wall Street flipped the switch and they are coming in big time at scale. And that blows the ceiling off where Ethereum's price can realistically go next. And if Ethereum's demand sounds explosive, but you missed out on the big move up since $1,400, Ethereum's most hated rally of 250% since April, just wait until you see what is happening right now with Salami coin. But first, let's dive into why this bank is so bullish on Ethereum and why it is still, even after the rally, looking undervalued right now. Ethereum has pulled off one of the biggest reversals in crypto, from being basically kicked in the nuts on a daily basis and Wall Street completely ignoring it, to Wall Street flipping on the switch, buying shit tons of ETH on levels that are unprecedented. It's one of the biggest reversals in crypto. Just months ago, ETH was getting dumped in a rush to the exit doors, and for good reasons. The devs didn't give a shit. Wall Street wasn't buying. Vibes were bad, man. Fast forward today and no one can get enough. That's why Standard Chartered has upgraded its year-end price target for Ethereum to $7,500, almost double its previous $4,000 call. That's not some random number being pulled out of their asses here. It's actually backed by data. The data, institutional flows, market dynamics, all that kind of stuff that are all pointing to a bullish move ahead still for ETH. Now, it's not the biggest move in the world, is it? But if you have a 2 or 3x leverage long and get up to $7,500, it's not bad, is it? Since June, Ethereum Treasury companies and ETFs have bought up almost 5% of Ethereum's circulating supply. That's billions of dollars flowing into Ethereum, into the hands of corporate owners that are not going to paper bitch hand their ETH, okay? Quietly and consistently behind the scenes, they're buying, they're stacking, they're staking, they're putting it in DeFi. And what's wild is that this rate of accumulation has already outpaced Bitcoin's institutional buying spree in late 2024, which shows Wall Street's interest is shifting, and it's shifting fast. Wall Street sees they can make a shit ton of money on ETH, and they're piling their money in. Now, Bitmine Immersion Technologies is leading the pack right now. That's Tom Lee's company. I own that stock, by the way. They own around 1.7 million ETH, worth around $8 billion, making it the world's biggest ETH treasury. But they're not alone. Sharplink Gaming, I also own that stock, chaired by Ethereum co-founder Joseph Lubin. Lubsta now holds over 797,000 Ethereum, worth around $3.7 billion. Together, these two companies hold more Ethereum than the Ethereum Foundation. I mean, the Ethereum Foundation's been nonstop selling their ETH for years. They don't actually have that much left. Vitalik, man. Anyway, and these companies, unlike the Ethereum Foundation, are actually buying more every single week. The ETF inflows tell the same story. In just 5 trading days alone, spot ETH ETFs pulled in $1.83 billion, which is shocking because, again, back in January, February, we had days when like $1 million was considered decent for inflows. $1.83 billion is not just strong, it's 10 times more than what Bitcoin ETFs have managed to do in the same time frame, okay? Wall Street's attention has shifted. They're never here to be your friend. They're not here for the Bitcoin mission. They're here to make money. You should be too. Proving the momentum has clearly shifted toward Ethereum. And here's why this all matters. ETH isn't just being bought up, it's being taken off the open market and dumped into these treasury companies and into the hands of the easy ETF holders, which are stronger holders compared to the average retail person. ETH supply on exchanges continues to reach record lows, over 200,000 ETH withdrawn in just 2 days the other day. Combine that with Ethereum staking rewards and DeFi potential, and you've got a crypto asset that probably isn't just undervalued, it's structurally scarce, plus offering yield at a time that demand is surging through the absolute roof thanks to Wall Street flipping on the buy switch. Ethereum doesn't just sit there like digital gold, like Bitcoin. It actually pays you to hold it if you stake it, which makes it a compounding machine. Now, it's only like 3.5–4% staking APY. It's not the biggest in the world, but it ain't bad, is it? That's why this trade has finally clicked in Wall Street's minds and why institutions are now piling billions upon billions of dollars into ETH. Ethereum is turning into the most productive asset in the game. Now, here's where things get very interesting. And that is that BitUnix has got a new insane promotion for September. Yes, I know. No KYC, no VPN, available to anyone, anywhere. That's you, no BS. $400 deposit bonus, $8,000 trading bonus, straight to VIP level 3 at a 30% fee discount when you use my link. And for the whole month of September, we're going to be giving away $1,000 every single live stream. This was wildly popular last time we did it. It's going to be wildly popular this time. All you have to do to be in to win that $1,000, open up your account using the link down below, deposit some crypto, make your first trade, and you'll be in to win it. Okay, we're going to be doing that every single live stream. So Monday through Friday, every single week. We're giving away $1,000 a day for the whole month of September. Link down below. Go check it out. So, Ethereum. Standard Chartist analyst Jeffrey Kendrick says the demand for ETH is just getting started. He believes that corporate treasury companies could eventually hold up to 10% of all ETH in circulation, up from around 3.5% today. To put this into perspective, Tom Lee's Bitmine immersion alone is targeting 5% of all Ethereum. To hit that 5%, Bitmine would need to increase its holdings from the current 1.7 million ETH to around 6 million Ethereum. That's a lot. Based on today's circulating supply of 120.7 million, that is, these are big numbers, guys. That is a crap ton more value that's about to flow into ETH. Huge amounts of money. We've tapped into the Wall Street money now, and it's flowing. Because of this, Standard Chartered isn't just calling ETH undervalued. What they're also saying is that the treasury companies themselves that we're talking about, again, the stocks that I own, companies like SharpLink Gaming and Bitmine, that they're trading cheap right now. I've bought both these. I bought more of those stocks over time. I agree. I think they're trading cheap and that those will trade way higher in the future. These companies are currently trading with net asset value multiples below 1 in some cases, or very much around 1, despite earning staking yields of around 3%, something Bitcoin treasuries simply can't do. Wall Street is basically pricing them as if they're worth less than the ETH they currently own, which is insane. So let's say Ethereum hits $7,500 this year. That is a 66% gain from here. But for this to happen, by the way, that's the 1.618 Fibonacci target, probably the next local top for ETH before major correction. Just FYI. But for this to happen, it's going to take a lot more to move the asset now compared to back when it was $1,400 in the April lows. So more money is needed to go from $4,500 to $7,500. Sometimes it's needed anywhere from 1 billion to 3 billion worth of inflows in a week to help push ETH to where it is today, around $4,500. So we need inflows to maintain from both the ETFs and from the treasury companies. They need to keep bidding. So it's going to take an even more sustained acceleration to push ETH towards the $7,500 price target. And because the prices have gone up, people are unstaking their Ethereum. There's about 1 million Ethereum being unstaked right now, 40,000 ETH per day in the staking queue getting unlocked. That's going to create a lot of sell pressure to hopefully sell to these Wall Street corporations so they keep pumping our bags. But keep your eyes on ETF inflows and corporate treasury moves, because that is the fuel that's going to continue the rally for ETH up to $7,500. If the inflows start to slow down significantly, ETH will lose steam. But clearly, Standard Chartered is confident that ETH will make it there because they already are looking further ahead. Their call for a $25,000 Ethereum by 2028 isn't just wishful thinking. Very bullish. Okay, even Tom Lee keeps up on his targets. Went from 16K to 30K to 60K now. But by 2028, it won't just be treasuries and ETFs driving demand. It'll be the growth of the stablecoin sector, tokenized finance, real-world assets. The structural bull case is only getting stronger. And if you love ETH, you'll love Sol, because guess what? It's got all that shit going on too, but it's currently, well, dramatically cheaper, okay? While ETH is getting gobbled up by corporate treasuries and ETFs, Solana is quietly stepping into the same spotlight, but for like a fifth of the market cap, at a much more affordable price point and with much more upside. We have Galaxy Digital, Multicoin Capital, Jump Crypto. All these guys have teamed up. They're launching a $1 billion Solana treasury. If successful, this would be the biggest corporate treasury for Solana, dedicated to Solana to date. Pantera Capital came out a day later, by the way, saying they're going to do $1.25 billion worth of Solana. Meanwhile, medical device company Sharps Technology, not SharpLink Gaming, but Sharps Technology, is launching its own $400 million Solana treasury. Combined, that's potential of 2.6 $7 billion of new buy pressure announced in the last week flowing into Solana. That's money that could make a serious impact on Solana's price, given it's a much smaller market cap than Ethereum. And it's not to say that other Solana treasury companies like Upexi or Solana Strategies have stopped stacking Solana. Very much the opposite. They are continuing to stack. And ETFs are coming, which means new demand from Wall Street for Solana specifically. So if you missed the ETH trade, or you're thinking ETH trade doesn't have enough juice left in the tank for you, then Solana is looking like the catch-up trade here, and it's already starting to outperform ETH, up 15% in 7 days compared to Ethereum's 7%. All Solana needs now is that spot ETF approval, and those inflows will accelerate at a much faster rate, making October the date to front run, because that's when we could get an ETF approval for Solana. So if you've been dreaming of the ETH gains you missed out on, Solana is handing you a second chance. Don't fuck it up, okay? Thanks for watching.